Hello, everyone. Welcome back to REIMAGINE 2021 V7 History of Coins. I'm Roshan Mirajkar, one of your hosts for this event. I'm also the project manager of the REIMAGINE 2021 series. I'm so excited to be joined here by a returning guest and one of the leaders in the crypto space. I have with me Alex Mashinsky, the CEO and founder of Celsius Network. Alex, how has the past couple of months been for you and your team in spite of all of the different macro trends that have been happening and all the crazy stuff that's been happening?
Yeah, hi Roshan, and thanks for having us again. Look, it's been a crazy ride for everybody. I think the entire crypto space obviously exploded in a good way, despite obviously all the difficulties of Corona and so on. But we are the digital future, you know. So I think it's like the rest of the world took a time machine and jumped 10 years into the future and came to visit us, you know. So definitely an amazing adoption on all fronts, both from retail, which was kind of our core business, but now we're seeing huge influx of both institutions and corporates who are basically can't get enough crypto, you know.
Yep, they can't get enough crypto, and there's not a lot there's not a lot of it out there, depending on which specific crypto you're talking about. But I think in general, some of those trends are just interesting, how it's a different financial infrastructure. And before we get into some of the new developments that you're working on at Celsius and how that ties into everything, I do want to I want to wind back a couple of years and want to hear from your perspective. You know, a couple of years ago at Celsius, you all made the decision to help people earn interest on their funds way back before DeFi was even cool. What was your perspective at that time, and how has that sort of shaped, if anything, compared to what's happening right now?
Yes, if you look at white paper from 2017, you'll see that really we have not changed our business model, right? Our focus was to basically enable people all over the world to earn yield, because the central banks are robbing us every day from our ability to earn money on our money, right? They decided that yield on dollars is zero or negative, right? In Europe, the yield is negative. And it's an arbitrary decision. It has nothing to do with how hard we work or us wanting to save or anything like that. So what crypto allows you to do is create this alternate economy in which we can lend peer-to-peer, or we can create yield by lending to institutions and really earn double-digit yield compared to the zero yield that we earn from banks. So really, we've been following the same plan since 2017, been paying interest longer than anyone on the planet, and we have 450,000 users, and we've paid now it's over $300 million worth of interest.
Yeah, that's amazing. And when you compare that to, what a lot of these traditional banks do, they just don't do it at the same rate of speed. I think that you and a lot of other platforms are going to catch up to some of those even larger milestones. And then it gets very competitive, as it already is. What do you think right now the role of retail is in DeFi from what you saw before? Are you saying that you continue to see more retail demand for DeFi, or do you also think that institutions will also be involved maybe on the other end of the spectrum?
Yes, when you see Tesla or MicroStrategy announcing that they bought $1 billion, they buy it from retail. Most institutions don't sell their coins. So the price is usually going up to a certain level where there is enough sellers to fill that demand or fill that amount that that institution is looking to buy. And this is the first time in history that the large institutions, right, the banks, the money manager, the investment advisors are effectively coming in and buying stuff from retail. Normally, retail buys from institutions, right? The institutions fund Uber or Facebook or whatever, and then we show up and buy those shares from the institutions. So it's definitely very unique time where the more we sit on our hands and don't sell our coins, the higher the prices we're going to be demanding from these institutions.
Yeah, it sort of creates a level playing field as opposed to anywhere where, before in history, you have all these other high barriers of entry. Either you have to be like a accredited investor or you have to have high amounts of capital to even access some of the opportunities. So I think it's really great how you all are democratizing that access. I do want to kind of ask you a philosophical or question about the inflection point. Like still currently in the crypto industry, or even outside, I should say, specifically about remittances. You've talked a lot about how money is sort of the money over the internet protocol, so to speak, right? Why do you think that people are still paying for things like remittances and actually still paying these fees? What is the inflection point to where people just don't use any of those services at all?
Well, a lot of it has to do with trust, right? So I created Voice over IP 30 years ago, and still only half of the world is using Voice over IP like we're using right now for free. Half of the other people are still paying their phone company or somebody to make a phone, right? So it's just crazy how long it takes for people to migrate from old habits to new habits. So it's the same thing with money, right? I mean, a lot of people that are comfortable, like me and you, are maybe comfortable with digital assets, with MetaMask, with different ways of moving assets, but most people in the world don't trust it and are not comfortable with it. So there's the adoption curve, or the adoption phase with money is even slower than it is with internet services like email or VoIP or anything like that. So I think it's going to take much longer for mass adoption. And we are definitely seeing acceleration because of because of COVID, but it's going to take a long time.
Yeah, you hit the head on the nail there. I think trust for sure. It makes sense that like money is not the same thing as a communication medium like the internet that they just described. So to kind of get into that a bit, because I know you all have some new updates at Celsius with introducing the self-insurance for the coins on your platform. Can you talk a little bit about what are some of those new updates and why are you even taking the further step to introduce insurance on the Celsius network?
Yeah, so self-insurance is one, proof of community is another, and these are all things that we're doing to help our community do even better. So one area that most people don't really understand about Celsius is that we're not a neutral platform. Normally, if you go out there and you say, oh, I'm a neutral exchange, or I'm a neutral peer-to-peer, or I'm a neutral DeFi, right? Like Uniswap or Aave or Compound, they're all neutral, meaning they don't represent the buyer or the seller or the borrower or the lender. Celsius is none of those things. Celsius only represents the community. So, and most of the coins we lend are going to institutions. What does it mean? It means that we are taking risk that the institution will not pay us back, right? On behalf of all the community, on behalf of 500,000 people that entrusted us with Bitcoin, Ethereum, and so on. So self-insurance is a mechanism that we can use, all of us can use, to basically guarantee that even if there's a default, and we've never had one, but if one happens, that we will be able to still return all the assets to all of the users in the platform. So if you buy insurance on the outside, you go to AIG or any insurance company, you have to pay them very high fees. Here, by doing it internally, we can do it in a way where basically 100% of the value of the insurance policy or the money that we collect for this goes against that loss, versus maybe only half of it. When you give the insurance company money, maybe half of it is paid against losses. The rest of it is all profit for the insurance company. So it's just a very efficient mechanism to protect the community against these kind of things. And the same thing with proof of community. It's a protocol that we created that allows our members to audit us at all times, 24/7, right? So imagine you being able to audit your bank. You only find out that your bank got in trouble and got bailed out 10 years after something happened. Here, using blockchain, everything is in real time. You can actually go and validate what Celsius tells you at any time and make sure that your funds are safe.
Yeah, I actually really love that concept of the community kind of, I won't say governing, but yeah, you definitely have some transparency into where you're putting your money. And I think that should just be a basic principle, if not anything else. Like we obviously understand in business, you need privacy at the right places. But now getting a little deeper into DeFi, I want to get your thoughts on, some of the trends that have been happening in the last year and what you also see happening this year. So when we talk about things like security, what is your view on, you all were doing, again, DeFi lending before it was, I guess, like everybody was doing lending and building all these yield farming apps quickly, right? So what is your view on kind of the risk and the opportunities in some of these yield farming apps? Do you think it's good for, I guess, consumers to have access to that opportunity, or do you think that there might be some troubles because you don't have any of those insurance guarantees, right? You have a lot of liquidation issues, is what I'll say.
Yeah, so obviously there's a lot of issues, but I think the main one that most people don't understand is where the yield is being created. So when you go on this or that platform and they say, oh, you can earn 100% on your money. Well, where is that yield coming from? Who's paying that yield? And you'll find out that it's really almost like a Ponzi scheme, meaning only if there's a lot of other people who are going to come to the platform behind you after you did your transaction and try to buy the same token or take the same loans or do farming or whatever, then everything works. But if people start withdrawing their assets, they start pulling away or selling these tokens, none of that works anymore. So today, DeFi farming works very well because every day thousands of new people showing up and everybody's excited and the yields are crazy and it looks like everybody's making money. But you have to understand that all of that works only as long as the music keeps playing. Celsius is very different. Celsius does not create yield from the fact that it hopes that additional people will show up. We aggregate coins from retail, we lend them to institutions, right? Or to exchanges. So most of our yield, about 90% of our yield, comes from those two sources, which DeFi does not participate in. No DeFi platform lends to exchanges or institutions. So because of that, we have a much more sustainable yield. We are thinking about the long term, right? We are a platform for hodlers, people who want to hold their coins 5, 10, 20 years, and not necessarily a place where you just come, you earn some yield, and you run away before the music stops.
Yeah, that's a great explanation and interesting to note the difference. I do want to ask you a little bit more about just your perspective or what you can tell me about, for Celsius, how does your strategy, or maybe it doesn't change, like how does it change as you see more institutions getting involved in crypto? Like, can you kind of explain for our audience, do you think there's different types of institutions that have different interests? Like some just want it on their balance sheet and some just want it, I guess, for their reserve. But I guess what you're talking about is something different. Can you kind of explain the differences between these things? Like why would an institution, choose to get involved in crypto?
Yeah, sure.
Like what are the benefits? Yeah.
Yeah, so what you hear in the news is mostly corporates or institutions that just buy and hold coins, meaning like MicroStrategy, right? Michael Saylor. So he bought, I don't know, $2 or $3 billion worth of Bitcoin. He's not trading it. He's not lending it. He's not borrowing against it. He's not doing any of those things. He's just buying it, putting it in treasury. He's holding it, and he hopes that it's going to go up in value, right? So we have very little interaction with those type of customers. Our counterparty, or the people who borrow from us, are people who have a trading desk, meaning they actually have 10, 20, 30 people that trade the commodities every day. They trade Bitcoin, Ethereum, Litecoin, whatever the asset is, and they need to borrow that asset to actually affect their trades. So they might be at the same time, they might be buying on Binance and selling on Coinbase, right, to do arbitrage, price arbitrage. And to do that, they need to borrow the assets and be able to settle the transactions and everything else. So we just make it easy for them to borrow large amounts of this or that coin. We support 45 different coins, right? So they can come to us and say, I need $100 million worth of Bitcoin. Bang, we can do that transaction in 2 seconds. There's maybe 2 companies in the world that can do 100 million worth of Bitcoin instantly, right? as far as instant loan, right? So those are the things that we do very well. We, in return, we charge high interest, and 80% of that interest, up to 80% of that, goes back to our community. So our community benefits because they're just sitting on their hands. They're waiting, just like Michael Seller, they're waiting for those coins for their bags to be worth much more. And while they're sitting and waiting, we're earning additional yield, right? We're earning another 5 or 6% every year in Bitcoin, right? So they're getting Bitcoin on their Bitcoin every year, which is much better than just having your coin sit on a ledger, not doing anything.
Yep, it certainly creates more use cases, and there's a variety of other things that people are doing even with their earned income. Like I think a lot of people are buying new NFTs, and again, staying in the crypto world, just getting more assets. So, and I think it's like it's a traditional mechanism that people are used to, right? Except traditionally you earn very low yield, and you don't really it's not really with another good counterparty, I'll say, right? It's your bank who doesn't really have the best interest for you. So that's all really interesting. I thought one interesting thing that you said, just with the trends, with the institutions that are getting involved, would you say that traditional finance has, failed during the pandemic? Like, you can answer this in terms of retail or even institutions, because if both sides are coming into crypto and getting exposure in different ways, like, what do you think are some of the ways traditional finance just did not work for a virtual world, so to speak, whereas cryptocurrency is kind of well suited? And I know you've talked a lot about this in the past. It is literally it's literally baked into the protocol, right?
Yeah, so two things. One is, if you own a pizza shop, or you have you're a barber shop, or you have any kind of a small business or medium-sized business, Corona came and you basically were left in the sidelines, right? I mean, the Fed, the U.S. economy kind of saved all the big companies. They got loans in the billions of dollars. But if you went to your bank and you said, "Hey, I need you to carry me for a year until this Corona thing is over," they laughed at you and kicked you out of the branch, right? So the banks are not here to help the small business. They're not here to help the retail guy. So 90% of the American population has been effectively excluded from participating in these programs that the Fed and other people enacted, right? In crypto, you have the opposite of that as well, meaning none of the major banks in the United States, JP Morgan or Citi or Wells Fargo, are in any way participating in DeFi or in digital currencies. They don't hold any Bitcoin, they don't trade it, they don't sell it. And only recently, right, only in the last few weeks, I think it was the first time that they've mentioned anything positive, where they said, okay, well, maybe you should think about buying a few of these coins. When the market was at a peak of 60,000 per Bitcoin, right? Then they recommended it. So my point is that they're not really a part of the community. They're not part of the network. They're not helping build it. And now that a lot of money is leaving them and coming to crypto, they're trying to find ways to become part of this party, right? Join the party. So I think we do need to build bridges between DeFi and traditional finance. And that's part of what Celsius does, right? We have kind of one leg in the centralized world and one leg in the decentralized world. And we're helping millions of people come across and join the digital revolution. But anyone who is expecting traditional banks to help us get there doesn't understand what this is all about. They want this whole thing to disappear, to be wiped out, to have never existed, because they can't compete with it, right? I mean, in DeFi, we're all effectively doing what's good for us, and that's normally is the opposite of what banks do for you every day. No, banks are not your friends. If you need a reminder.
Yep, that's a good reminder. Although I think many people watching this, and most people, I think they're starting to understand that trend, right? And I want to ask you a question about that as well, which is the basic principle of the bank has a different motive than they don't really care what your motive is. So what I was going to ask you is, how do we convince, or how do we shed light to more people who are using banks and still earning those standard rates. Like, can you talk a little bit about, I guess, inflation versus yield? And I guess you can talk a little bit about what are the advantages of how your platform or even other kind of lending or income generating platforms have over these banks, even if they have more custody of assets in some cases. Although I know recently you also crossed, I believe, 9 billion worth of assets, and that's a traditional accomplishment. So where do you think, again, is the inflection point where that comes first before a bank, if that makes sense? Like, I'm talking about maybe the younger demographic, like some of the students out there that are starting these blockchain clubs. When you talk about some of these ideas we're talking about here, they don't even think about the bank first, right? So what I'm sort of asking you is, why don't people still understand this balance of like inflation versus yield, and what's
Sure.
actually happening in their bank account right today?
So you're right, and despite the fact that most millennials and Gen X's are rather go to the dentist than go to their bank, they still use that service, right? So on one hand, we the community, the crypto community, has not really created products that are easy or are as inviting to allow these people to kind of jump in and switch away, right? Never use. You have to unbank yourself, right? But most people still have a problem doing that. So, if you look at a traditional bank, right, you work for 2 weeks, your salary gets deposited directly with that bank, and really what that bank does, your favorite local neighborhood bank, they issue you an IOU. So you got paid, let's say, whatever, $2,000. They give you an IOU. We, the bank, owe you $2,000. And they immediately take that money and lend it out to your neighbor or your friend on their credit card, and they charge them 24%. They give you nothing for it, nothing. Even if you moved it to your savings account, okay, you'll earn 0.1% per year. While they at the same time, they're charging your friend 24% on their credit card. So you as a user, you're the person who actually worked hard and made that money. You get to keep nothing out of the value that the bank is creating with your money. So your money is working, it is creating value, but it's not creating value for you, it's creating value for the bank that accepted your deposit. So all of that is being replaced with a system where your money immediately, like if you deposit your money in Celsius, it immediately starts earning 12.5% because we landed at 15%. Right? We give you 80% of that, and it immediately earns 12.5%. You can withdraw it at any time. You can deposit in the morning and change your mind in the afternoon, take it out, nothing happens. There's no fees. There's no like withdrawal fee or early termination fee or inactivity fee or an ATM fee. None of those fees, right? Nothing exists. But most people, when they look at it, they go, come on, 12.5%, that's 100 times more than my bank. How is it possible? And the issue is not that we're so good. It's that the bank is such a good thief. They're stealing from you so badly that you think that 0.1% per year of interest is a reasonable number. Obviously, it's a completely unreasonable number. Just a few years back, the same bank paid you 6%. So what happened? They're still earning the money. They're still charging 24% on the credit card. That hasn't changed. So why they're paying you so little? So all we're doing is we're waking up a whole generation to the fact that you need to expect your money to work for you. Just like you work for your money, you need to expect that when you make it, your money should be working hard for you 24/7. And that's what Celsius enabled you to do, right? We lend it out, we make it work. You get most of that reward back in your account every Monday, like a clock. You get interest that your money earned working the whole week.
I love the way you described that it's not really crazy that all these yields exist in our industry, but it's like the reverse. They actually do, as you described, exist in the traditional world, but you just never get to take a bite out of that cake. And I think, yeah, that is wrong because there's no transparency to a lot of those things. So I thought it was really interesting how you talked a little bit, sorry, I forgot what exactly it's called, but I want to ask you about your community aspect to your platform, and also ask you some questions about what do you see as the future growth of the community on your platform? Like, are there any planned for governance, or what do you think it can evolve to? You can also answer this in terms of additional use cases for the token you all have as well. Like I know people get some discounted rates and things like that.
Right. So we were the first one in the world to actually pay you interest either in kind, meaning Bitcoin on Bitcoin, or tell you, hey, you can earn it with this token, right? No one has ever done that. Since then, Compound and Aave and a lot of other people said, oh, let's just copy the Celsius model. And instead of calling it MOI for money over IP, we're just going to call it DeFi, and we're going to pretend like we invented the whole thing, you know? But really, again, Celsius and the Cell token, last year, Cell token was the best performing token in the world, right? It performed better than any of those platforms, returning close to 4,000% in 1 year, right? So obviously we were doing something right. And a lot of it had to do with the growth of the community, right? The fact that hundreds of thousands of people told their friends, showed up, trusted us with the deposit, and then we managed to get a lot of that interest. So the Cell token is a utility token, meaning it allows you to have additional benefits. And instead of earning Bitcoin on Bitcoin, you can earn up to 25% more if you are a platinum user and you can actually use or have the token in your wallet, right? So that helps you basically earn more, pay less on loans, and earn yield on the token as well. If you just deposit the Cell token, that earns 5% as well. So we basically created these token economics. You can go back to our white paper back from 2017 and see that we haven't changed anything. Today, every platform, if you look at crypto.com or Voyager or anyone, right, they're all copying the Celsius model of rewarding the community with additional benefits using a token. So we're happy about that, because the more we pay out, right, the more we as a community pay out in interest, the more people we convince from the traditional world to come and do this with all of us. If Celsius was the only one around, people would still say, oh, they're crazy, those guys. It's Alex and his army of Celsians. They don't know what they're doing. No one else is doing this. Well, now there's 50 competitors. We have 50 competitors. They don't pay these rates that we pay, but they're all copying us one-to-one. So there must be something good about what we've created. So I think we're just the beginning of the road. 9 billion, as you said, is just the beginning. And yes, we're bigger than many federally chartered banks in the United States, but we're nothing. Like if you look at JP Morgan or some of the large guys, they all have trillions in assets. So we're just, for them, we're just like a cockroach. They look at us and say, who are you? Why are you in the room with us? Like you don't belong here.
Yeah, I was going to ask you, so do you think that platforms like yours actually have a chance to, I'll say, kind of catch up and even surpass a lot of these institutions, only because you're saying that if I need to earn interest or if I even need to get a loan, I can sort of do it instantly. And if I compare that to the process of, traditional finance, it's just a lot of time in between. There's a lot of lag time, right? Like I'll give you an example. Like one quote they say on crypto Twitter all the time is like one crypto day equals like 3 days in the traditional markets, because it's always open, right? So do you think that works the same way in terms of like loans and interest? You can kind of answer this in the scope of the pandemic, I guess. Like, how has it changed your business? Have you seen, can you actually see those same trends, actively, whether it's in the transactions or even demographics? Like, what are people mostly doing, or what have they tried to do on your platform during the pandemic?
Yeah, so we've grown 10x since the pandemic started. So it's not like we grew 100%. We grew 10 times, right? So we grew 1,000%, both in users and number of loans. And we do offer unique things, like we offer a 1% loan. So you can borrow dollars against your assets, against your Bitcoin or Ethereum, and you pay 1% per year, right? I mean, you can't get that from any bank, right? You can't get that from anyone. No credit check, no employment verification. You get the loan approved the same day, and you can draw the money right away and use it for whatever you need. So So that kind of service is something that's just non-existent in the traditional banking system, right? And again, the bank looks at you as nuisance because they already got your money. The last thing they want is to lend you back your own money, right? So they rather go and give it to somebody else on their credit card at 24%. They don't like lending it to you to buy a house or buy a car or anything like that because they earn much on those loans, right? So I think, again, most people in the world still look at crypto and think this is crazy. This is only for criminals, or it's a bad thing. You heard Janet Yellen talk about that yesterday, just still saying it's 2021 and she's still talking. She's still yelling about stuff that she, whatever, that is created in her mind. So we have a lot of still like education to bring people into the tent. But now we have some of the world's richest and smartest people as our ambassadors, right? Elon Musk and Michael Saylor and a bunch of other people, Jack Dorsey, right? All these people who are basically carrying the flag for crypto and trying to convince the naysayers that this is here, it's here to stay, the people want it, and everybody else has to basically, if they like it or they don't like it, they gotta have to basically learn how to live with it.
Yeah, and I think at this point we have already passed a lot of those inflection points where like companies in the S&P 500 are gaining exposure, and everyone is generally talking about the same paradigm shift of the companies not wanting to hold cash, or at least actually getting some skin in the game, which I do think is important. Do you think just demographically that's something like the interest income that your platform enables, do you think it's different demographically? So I'm kind of asking a philosophical question in the sense of like people in third world countries, do you think they think of this whole interest bearing is very different than first world countries? Because I would say in some cases, I could even see platforms like Celsius maybe expand into creating like a credit record for people. Or I just thought of it because you said that people who have, let's say, crypto in other countries, they can now have access to these things without those same barriers, right? So I'm just wondering, if you also think that,
Yeah, crypto is used for different purposes all over the world. So if you're in Nigeria or in Venezuela or Argentina, there's a high chance that because of the restrictions in your currency, and because your currency is losing value so quickly, you're actually using it as a store of value. You're not trying to earn interest. You're just trying to basically, you get paid and you immediately want to convert from your lira, from your, peso, whatever you're holding, immediately as fast as possible into something that does not lose value. And it used to be the US dollar, but now the US dollar is losing value quickly as well. So Bitcoin is being used for that in many countries, third world countries. In countries like Europe or the United States, it's mostly investors who are looking for diversification, right? And they're looking for yield. They're looking to basically put 5, 10, 20% of their portfolio into something that is not correlated to the stock market or to being denominated in US dollars. So it still has many different use cases. And what we provide, which is loans and yield, are some of these functions. But in other countries, people just use it as a store of value. That's the basic function of Bitcoin.
Yeah, I think that's a good important distinction to make, the differences between the two. I have two more last questions. One quickly, do you think that going forward in the next couple of years, we'll see the migration of Bitcoin into more DeFi products? I think it's kind of separate right now. Or do you think that Bitcoin will just be its own thing?
Well, so Bitcoin is still the granddaddy. It's about 65% of the market cap. It does live on DeFi. There's what's called a wrapped Bitcoin and other types of Bitcoin that exist on DeFi. So you can take your Bitcoin and make it earn yield, or you can just deposit at Celsius and it will do it automatically. You don't need to learn how to convert or mint wrapped Bitcoin or anything like that, right? You just deposit in Celsius and it starts working for you day and night. So will DeFi come to Bitcoin? That's a much harder question because Bitcoin has done an excellent job at scaling and being a very reliable store of value, but it has not kept up with the developments and all the smart contracts and everything else that's happening on Ethereum or Cardano or Polkadot, all the different projects that are trying to extend Bitcoin to do much more. So I think you're going to have the crew or the clan that's kind of like sticking to the basics and just buying Bitcoin, like Michael Saylor, right? He's just buying Bitcoin. He's not doing anything with it. He just wants it to double or triple or 10x, right? And then you have a bunch of other people who are like, no, I'm gonna be the pro I'm gonna be the DeFi pro, right? I'm gonna be the OG. I'm gonna earn all this money. I'm gonna show everybody else how it's done, right? So, and a lot of these people burn out because they take too much risk. They don't understand. They jump into young protocols that might be a week old. They get hacked, or the money gets stolen, or there's a rug pull. So you have to be very careful. It's not just because something on Uniswap doesn't mean it's a valid token. I see people swapping from they give away their Ethereum and they get a shit coin and they think they're making money, but it's not Ethereum, right? So unless you know the detail of what's happening, every coin, who's behind it, how long the project's been around and all that stuff, there's a pretty good chance you're going to get yourself in trouble. So again, right now the music is playing, everybody's making money, but when the music stops and there's not enough chairs for you, guess what's going to happen? Your pockets are going to be empty.
That's actually really good advice, and I encourage everyone to listen to Alex and look at things a little more closely on the new products coming out. They're not all original ideas, and again, what he said earlier, look at where that yield is actually coming from. There are sometimes ways to actually find out. To wrap things up, I want to ask you one last question. What is the most exciting use case in crypto that you think will happen in 2021, like something people will use and not
well,
go back?
it's the same use case I've been preaching since 2017, which is yield, right? And the issue is not about people becoming millionaires and buying a Lamborghini and flaunting their wealth to everybody. The issue is that millions of people who don't see a light at the end of the tunnel, they don't know how they're going to pay for their family or get their kids to college or pay for their parents, suddenly can see that. They can see, okay, I can earn some money, I can save, I can earn yield or interest income, and that money that I'm earning on is helping me pay off my bills, or helping me pay off my credit card, or helping me take care of my parents, right? And things like that. So for us, the most exciting thing is when people have use cases for the money they're making that are really changing lives, right? That's showing people how they can achieve financial independence, financial freedom. And that's what we do. Every Friday, we have an AMA, right? 1 o'clock Eastern every Friday on Celsius Network. Go to YouTube, search for it, where we actually teach this stuff, right? We share with people best practices on how to achieve that financial independence, because unfortunately, they don't teach you that in high school. They don't teach you that in college, right? Like, it's like a very well-kept secret that only the fat cats in Wall Street know, right? How to create compounding interest on your money. So we kind of brought that to the masses, right? We enabled anyone. You have $100, that's enough. You can come in and earn yield on it and earn 12.5% and build up your wealth slowly over time. So that's what we're excited about. I think that is the killer app. And, you know, we're going to scale it. And hopefully next time we talk, I can tell you about several million customers and 50 billion in assets that we help to manage for these people all over the world.
It was great advice. Thank you so much for coming back on the Reimagine 2021 series. Alex Mashinsky, everyone, go ahead and check out the Celsius Network and really learn about a lot of the things mentioned in this talk. I'm your host, Roshan, and I'll let you all tune back into Reimagine 2021. Thank you, Alex, for being here today.
Thanks for having us. Looking forward to do it again next year.
Yep, looking forward to it, as always. Thank you.